I think you can start. Thank you, Assalamualaikum. Thank you for joining us today, despite the traffic situation. So BIGD, in partnership with the World Bank, is pleased to welcome you to today's event, The Future of Financial Inclusion, presenting the Findex 2021 Bangladesh Findings. I want to start off by thanking our partners for making this possible today, especially Dr. Leona Clapper and Sania Ansar, who's here today with us from the World Bank, and Dr. Seth Gars of the Bill and Melinda Gates Foundation. And of course, to each of our esteemed panelists today, we're very lucky to have a great panel and looking forward to a great discussion. BIGD is, as you know, is a social science research organization. We're part of BRAC University, and we conduct a wide range of research on social and economic and governance issues. And our mission is to promote practical, time-sensitive innovations for tackling governance and development challenges in Bangladesh and globally. So one of our projects under BIGD is WeDefine. It stands for Women's Economic Empowerment in Digital Finance, funded by the Gates Foundation. And the objective of this initiative is to generate a wide range of evidence on women's economic empowerment through digital finance. So it is extremely exciting for us to be a partner in hosting this event today, and also to be part of this conversation in Bangladesh on financial inclusion. Today we have a keynote speaker from World Bank, Sania Ansar, who will go first. And after that, we have Kim Cole. I'll come to the introductions as we go along. After the two presentations, we'll have the panel discussion. And after that, you get a chance for a question-answer session. We have a number of participants online, I hope, so we'll take questions both online and offline. And I hope someone will help me channel the questions from online, and hopefully we'll wrap up on time. So just as an introduction, Sania Ansar is an economist with finance and private sector research team of the Development Research Group at the World Bank. Her research focuses on access to finance and digital payments, especially for women and poor around the world. And she's been working on this Findex. Actually, the Global Findex Database has been the definitive source of data on the ways in which adults around the world use financial services. And it's been, I think, since 2011. And the 2021 edition has nationally representative data from 123 economies. So it's a quite large data set, and it's a very useful data set. And we had an earlier event hosted by World Bank and BIGD before on launching the Global Findex. But today we focus on the Bangladesh findings. So I would like to invite Sania to make her keynote presentation, and then you have 20 minutes, I believe. Yes, 20 minutes.
Good afternoon, everyone, and I'd like to thank BRAC Institute for having me here today, and for everyone else to joining me and the panels, despite all odds. So the presentation today will focus on the findings from the Global Findex Database from Bangladesh. And as we move along, feel free to ask any questions. I think we have a small group here, so we can also, if you have any confusion or questions about the data or methodology, feel free to ask as we go along. So the database itself is a demand-side database, and it captures data on access to and use of financial services around the world. And what it does, and it goes to different individuals in different countries, so about 1,000 individuals in each country, and asks them about how they conduct financial transactions, what kind of financial services do they use, what are the savings patterns, borrowing patterns. During COVID, for example, we asked them if they were more likely to use digital payments instead of cash payments. So we asked a variety of questions. And we've been doing this for about 4 years over the last decade. So we have 4 rounds of data. And the most recent data was released in 2021, where we surveyed about 123 countries, a little less than what we do usually, and mainly because of COVID, and we couldn't survey a lot of the countries. But through this, we were able to track the growth and the trends in financial inclusion in the world, but also in Bangladesh. So what we find is that about 76% of adults around the world have an account, which is very promising because it is the growth from the previous years. We also find that, so in the past, if you look at some of the earlier data before 2017, you'll see that a lot of the growth was coming from India because of its JDY accounts, or it's coming from China because of its Alipay and digital payment service providers. But if you look at the last 4 years, the last round of the data was 2017 and the most recent one in 2021. And just looking at the first column here, you'll see that the growth is a lot more distributed now. It comes from Europe and Central Asia, it comes from Latin America and the Caribbean, Sub-Saharan Africa. And what we really see is that South Asia, this is not the case, and South Asia has still sort of not shown a lot of growth, and change in account ownership has been stagnant. So what we'll discuss now and in the next few slides is that the stagnancy is not necessarily just in overall account ownership, but what we see is there's a turnover in the type of account for the people who are using these accounts. And we're seeing that more women are getting accounts, whereas fewer men are using accounts, more poor are getting accounts, and fewer rich are. So we'll explore this in the next few slides and see what it means for Bangladesh. So when we look at the Bangladesh figure here, in the second set of columns, you'll see how account ownership has increased over time. And we give the breakdown for traditional financial institution accounts, but also mobile financial services, so people who use mobile money accounts. And you'll see that in the last 2 years, 2017 and 2021, there isn't a lot of growth. But two things are happening. One, over this time, there has been an expansive growth in the use of mobile money. So about 26 percentage points more than what we saw when we first started capturing this data. And then we also see a turnover. So you can't really see here in the colors, but in the middle stack here, you'll see that more people who already had a financial institution account are getting mobile money accounts, which really indicates a change in user preferences, that over the last 4 years, preferences have moved towards, while new accounts have not been really opened, people who used to have financial institution accounts are getting more mobile money or using more mobile money services. Digging a little bit deeper and trying to see how inclusive this growth was. So as I mentioned earlier, so bringing that information in, where we see that more women are opening their accounts. Again, it's not very clear, but you can see that the gender gap in 2017 was one of the largest in the world at the time. So almost 30 percentage points. It's decreased by 10, and you'll see now that about 19 percentage point gaps still exist. That is promising. However, this is still quite high compared to the averages for developing economies. Similarly, you'll see the same for income and education gaps also, that they're closing over time. And this is a trend that we see in some other developing countries also, that as the use of digital financial services grows, the gap between men and women, poor and rich, all of these gaps start decreasing. And a lot of this, and if you look dig deeper into the data, you'll see that a lot of this is driven by mobile money. So then who gets left behind? So now we know that there is about 60 million, and if you calculate the number using the percentages, there's about 60 million adults in Bangladesh who do not have an account. They don't use any kind of financial service. So what are the barriers and what are the main reasons why they don't have this? So the data from our survey shows that the top barriers that they report are cost and distance to financial institutions, which is why maybe, and this is our sort of insight from this, that there may be a preference. This is why there's a preference for mobile money, because if people use mobile money, they don't have to travel long distances for starters, or they don't have to pay, they can actually use low cost, low denomination mobile money accounts, whereas traditional banking accounts in a brick and mortar bank might be more expensive for them to use. Then we notice some other interesting patterns to when we're talking about the barriers. So about 27% of adults also say that they didn't have the necessary documentation. So what's going on here? Because we also collect identification data, and we found that majority of these people who are saying we don't have the documents actually have the national Bangladeshi ID. For this, we think some of the other barriers could be that when they go to a bank, they may be asked for other KYC documents, such as proof of residence, a local utility bill, and these could be the barriers. And then we look at some of the gender gaps in this as well. And some cultural barriers come up. So if you ask more women than men, we're likely to say that they don't have an account because of religious reasons, or because someone else in the family has one, so she doesn't need an account. So these are some barriers that we identified. But then one other barrier that we found was that people just lack the financial confidence to use an account. So about 60% of the unbanked in Bangladesh say that if they were given an account, they actually wouldn't know how to use it. So they're already feeling the lack of confidence, and that's becoming a barrier to them using or getting an account. And then we find that women, more than men, are more likely to report this as a barrier. And so what this means is that there is a strong need for financial regulation and consumer protection, along with recourse in case some problems happen or there's financial abuse or fraud around financial services. Last year, we released data, which is something that BRAC also helped us work on, was data on how when financial services were provided to garment factory workers. So what we did is we did a RCT, and we found that women who were given a bank account and paid their salary into a bank account from their garment factory, they were more likely to use financial services in the future, or they were more likely to understand that there should be no fees or what the fee structure around wages should be, as compared to women who were receiving those payments in cash. The reason why I'm mentioning this is that there is hope. So there is one possible way of increasing confidence among the unbanked, but also among the users of financial services, is by providing them with an entry point or a starting point for them to understand how this works, and building up on that in the future to add on other services. So shifting gears a little bit and thinking about what is going on with the usage among the actual owners. So we've talked about ownership so far, but let's move on to the users of the actual accounts. And we see that while account ownership was stagnant, there are actually more people using their accounts. So among the account owners, about 86%, nearly all of them are making or receiving some kind of digital payment. And this is very promising. But it comes with a gender gap, which is bigger than what we see in ownership. So among users, 24 percentage points, men are 24 percentage points more likely than women to use digital services. And this, I think, is again, we can discuss a little bit in the next few slides about where this could be coming from. So first off, let's look at G2P payments. Now, G2P payments include government transfers, pensions, or it could also include public wages. So all of those combined together. And what we see is that the green part here will indicate those who are receiving them into an account, and the yellow and the orange are people who are receiving it in cash and other methods. And we'll use this format of the slides for the next few slides as well. But anything in blue should indicate that this is digitalized. And we find that majority of the G2P recipients are receiving digital payments into an account. This again is very promising. And what's better is that there's no gender gap here. So men and women are equally likely to receive. One reason for this could be the government emergency cash transfer programs as well that happened during COVID, which allowed a lot of informal workers and a lot of households to receive payments. And we see this also in the trend between 2017 and now, that there's actually been a growth in the use of account to receive such payments. There's also another promising case study, which is around remittances. So 32% of adults in Bangladesh are sending or receiving remittances within the country. So we're not looking at international remittances, and majority of them are doing it digitally. And if you see how high the blue bar is compared to all the other countries in the region, you'll see that Bangladesh is really the leader in this space. And what we're also seeing is that during COVID, these numbers went up by almost tripled over time, which is really, again, an indication that people are ready and willing to use services if they're given an account. So another important critique that's made, and it's fair, often what is said is that when you give money to people into an account, so far we were just talking about receiving payments. So receiving a government transfer payment or receiving money into an account from a family member. And often it is said that when people receive payments, they just go and withdraw it immediately and don't do anything else with their account. And that has also been a critique for financial inclusion, providing G2P services digitally. But we looked into that data, and on the right side, you'll see that these are all the people who are actually using their account or making different kinds of payments from the payments that they receive. So looking at the bullet above, you'll see that about a quarter of adults are receiving payments, and majority of them, about 82%, are also making digital payments or using their account for something else, such as borrowing formally or saving formally, or they're just keeping money in their account in times of need. So we'll explore this a little bit more as well. So the first thing we see is that majority of the adults in Bangladesh are paying their utilities digitally for the first time since COVID. So I'll break this down a little bit. So here you'll see that the blue bars are actually split into two. So what we're seeing is that about 66% of those who are making utility bill payments are actually making them through an account. And this has grown significantly from 2017. I think this is also maybe worth mentioning here that during COVID, I imagine there was a policy or a program that was introduced so that people could make utility bill payments, and interoperability was encouraged through that program. And you really see the impact of that program in here, where you can see that during COVID, and which is the dark blue bar, nearly majority of those who had started making digital payments for utilities did so when COVID-19 restrictions came into place and people were encouraged to use digital payments over cash. Then we also find that about 14% of account owners are saving in Bangladesh formally. This, unfortunately, is low, and you can see that compared with the rest of the region as well. So what's happening here? So if you look at the non-blue stacks of the bar, the light purple and the yellow, you'll see that a lot of people are saving, but they're saving through a savings group or a local committee, or they're saving informally, such as women putting money under their mattress or in a tin box and hiding it. So what this indicates that, people are saving, or there's an appetite for saving, but they don't have access to the actual services or the right kind of products to encourage them. We also notice another thing, and this is an encouraging trend again, is that women and men both were quite likely. So if you look at the figure on the right and the dark blue part, these are people who are just storing money in their account. They receive money and they're just keeping it, maybe until the end of the month or until next month. And what this means is that they're doing this low denomination savings in their account. And if financial service providers would capitalize on that and provide them with more encouraging saving models, they would actually choose to formally save that money for the longer term. What we do find also encouraging is that about a third of account owners in Bangladesh are borrowing formally, and this is probably driven by a lot of the micro borrowing initiatives in the country as well. But that's a third of the bar that you see there. And again, if you look at the orange and the yellow parts, those are people who are saving or borrowing formally, but borrowing in some other way. So they're borrowing from family or friends, or from a workplace, or but just by working longer hours. And what this means is that they're probably using unreliable or inconvenient or high cost modes of borrowing. And by providing them, which means that there is obviously a need for borrowing more, but they don't have the access to right kind of resources. And these group here are typically also people or adults that we notice who are unbanked and don't have financial services. So what can be done? And this probably gives us a quick snapshot of some of the opportunities. Unfortunately, the font's really small from here, but let me just talk about what this slide presents, is that we started looking at all these people we started looking at the low-hanging fruit. So people who are already making some kind of transaction that they're receiving money into an account, or they're saving informally, and are unbanked, or they're selling an agricultural product, receiving a payment for it, and they're receiving it in cash. So we look at different types of case studies or different types of payments, and we find that, let's say, about 7 million unbanked adults in Bangladesh are receiving a private sector wage payment. If we could introduce, this is an immediate low-hanging fruit, because capitalizing on that or just moving into this group and digitalizing their payment methods could encourage up to 7 million new accounts. Similarly, agriculture payments, nearly all of the ag payments in Bangladesh right now are being made in cash. Just by capitalizing on this and digitalizing that could add up to 6 million new accounts. So just through this and the different facets of the data, you can find potential opportunities for how more adults can be banked. But then we also looked at, because we've already identified that use cases are high among account holders, we looked at one component where there is an opportunity to encourage use, and this is among merchant payments. What are merchant payments? Merchant payments are people who are making a payment in a store or online using a card or a mobile phone or the internet. Any kind of digital payment to a merchant would be considered under here. And you'll see here in the figure that there's virtually none that are being made digitally in Bangladesh. And this is about 60 million adults who could potentially be using their accounts that they already have to make these payments. And why is this important? A, it's important because for customers, they're able to make payments in a more efficient and safe way. But B, but also for the shopkeepers or the merchants, if they start digitalizing these payments, they can actually build credit histories and use these credit histories to get loans from banks. So using this particular avenue could actually help in a lot of other ways as well. And then finally, I think this is sort of summing up why and what we discussed this. And we asked this question on resilience, and we asked people that, and maybe something for us to think about as well, is if there was an emergency, a health emergency or some other kind of emergency, and you were asked to come up with 8,200 takas, and how would you do it and who would you go to? So we asked them, who are the sources for your emergency funds? Would you go to your savings or to your family and friends? Or would you go to your employer? And we asked them all these things. And majority of the people in Bangladesh, both men and women, said that they would go to family. And then their second most common option was work. But then what you'll see here is two things. One, if you see the blue bar, those are the people who said, we followed up this question. So we said, okay, so if this is your source, let's say you'll go to your sister, for example, and if there is an emergency, how likely or how reliable would she be as a source of funds? And then our respondent would say, oh, not very reliable because her husband would never give me the money, or she doesn't have this money, I'll never be able to come up with sources. So what we see here is that while the majority go to social networks, such as family or work, they actually are going to really unreliable sources. And those sources, nearly half of them, it would be impossible for them to come up with this one. And what this means is that when an emergency actually happens, they will not have the right kind of funds or the resources to cope in that emergency. And it's showing us that in Bangladesh, about 50% of adults say that they would find it really difficult to come up with funds in an emergency. And for women, it's only a quarter of adults who say that they would be able to come up with funds, which is, compared to developing economies, almost 30% of what people in developing economies say, incredibly low and incredibly difficult for them to be resilient in times of emergency. And what it points towards is that we need better savings products or better borrowing products and ways in which people can tap into resources when there is an emergency so that they don't have to move money away from more beneficial things in their households, such as education and health. So I think this is my last slide now. And with this, I encourage you to dig into the data, to ask me any questions during the panel, and feel free to read up our report as well, which has more information.
Sania, thank you for that presentation. And I like how, you not only present the gaps, but offer some ways for increasing the number of accounts and usage in Bangladesh. I'm looking forward to how the panelists feel about that and what their suggestions would be in that area. I now would like to invite Kim Cole. Kim Cole is the director of BIGD's We Define initiative, which is, as I mentioned, is an initiative that funds research on women's economic development, empowerment, and digital finance. Kim has been working on the intersection of research, women's empowerment, financial inclusion, and SME development for some time. And she will present opportunities for the advancement of financial inclusion in Bangladesh that BIGD's program, the We Define portfolio, is positioned to address. Over to you, Kim.
Thank you so much, Minas, for that introduction. Can you all hear me okay? I need to join the All right, can you hear me okay? Okay, great. So thank you so much, Minas, for that introduction. And thank you, Sonia, for being with us today. That presentation was fascinating. I think there's a lot of continuity with We Define that I'm excited to share with you today. Thank you to each of our panelists for being with us. And thank you to all my BIGD colleagues for helping organize this event today. We really appreciate you. So as Sonia mentioned in her presentation, the landscape of account ownership in Bangladesh is changing, and a lot of barriers persist, including for women. Today, I will present BIG's We Define initiative and the ways in which our Bangladesh portfolio is generating policy-relevant research to advance women's financial inclusion and empowerment. All right. So a little bit about We Define. We Define was created to really generate rigorous research at the intersection of digital financial services and women's economic empowerment. We know that there's an interplay between the two, but there is not a lot of research on the causal mechanisms that feed into one another. So We Define was generated to really examine these causal mechanisms and generate rigorous quantitative and qualitative research to this effect. As such, we support rigorous impact evaluations and qualitative research in the Global South. And of course, we're headquartered at BIGD here in Dhaka. There are a few things that make the We Define initiative a bit different. So first of all, as I mentioned, we're based here in the Global South. And we put a lot of effort into helping level the competitive playing field for promising academics. So we support teams in helping prepare competitive proposals. We have a number of online resources. We offer one-on-one coaching, and we also offer feedback calls to unsuccessful applicants. And as I mentioned, we prize mixed methods research and also quasi-experimental methodologies, which makes us a little bit different. We Define has executed 3 requests for proposals to date, and we have supported 18 studies across 9 countries. Our funded portfolio amounts to about $1.6 million, and our awards range from $15,000 to $360,000. We Define's white paper, which is available on our website, delineates the specific causal mechanisms that we're interested in exploring. But to just name a few that our portfolio addresses to date, we're examining behavioral influence, bargaining power, and women's ability to enact preferences in our research. As I mentioned, we're really keen to try to level the playing field for academics, especially from the Global South. So these are a few competitive statistics on our portfolio to date. You can see that about 3/4 of our studies include a female academic or an early career academic, and about half of our studies include an academic from the study's country of focus. Also, about 44% of institutions that receive award funds are headquartered in the Global South. In the future, we're looking forward to continuing to improve on these statistics. I'll share a little bit about our Bangladesh portfolio overall, and then I'll dive into some specific studies. So presently, we have 4 studies in Bangladesh. We have 2 large-scale RCTs, 1 pilot RCT, and 1 qualitative study. Our researchers are collaborating with leading institutions in Bangladesh, including BCash and the Shakti Foundation. And of course, in terms of causal mechanisms, we have a number of different exciting themes that our studies are looking at. But just to name a few that I'll go into more detail about today, transaction cost and mobility are two specific areas of focus. I'll share a little bit more information on 3 of our Bangladesh studies. The first one I'd like to spotlight is an RCT that's led by Dr. Jessica Goldberg of the University of Maryland. And this study offers subsidies to mobile money businesses to hire either a male or a female mobile money agent. This study is fascinating. It looks at a lot of different impacts, but one of the most salient is the study is measuring the effect of employing women as mobile money agents on women's take-up and usage of mobile money. So in other words, are women more likely to use mobile money if they're interacting with a female mobile money agent rather than a male mobile money agent? This study is ongoing, but we are expecting preliminary results next month. So please stay tuned, and we're excited to be releasing those. The second study that I'd like to spotlight is actually WeDefine's flagship study, and it is a mixed methods design. It's an RCT in conjunction with a qualitative study, which is led by BIG researchers that include Dr. Wahed Rahman and Lupita Haq. Now, this study collaborates with Bcash and the Shakti Foundation to offer varying levels of subsidies on transaction costs for mobile money transactions. And in short, what this study is examining is to what extent does the actual cost of the transaction cost increase or decrease women's demand for these products. Data collection is ongoing, and we're expecting preliminary results in about 1 year's time. The last study that I want to focus on has a lot of continuity with Sania's presentation. So I'm excited about this one. And it's a pilot study based here in Dhaka, led by Dr. Zaki Wahaj of the University of Kent, Canterbury. This research team has collaborated with the app Hello Task, which partners domestic workers with short-term employment opportunities across Dhaka City. And this app also offers digital wage payments via Bcash to the domestic workers. These researchers are, in a sense, pairing this wage digitization function along with a digital literacy training to assess how these interventions interact with women's financial literacy and control over finances. Very excitingly, we have baseline studies. This is the first time these results are being released to the public, so I'm very excited to share these early findings with you. A little bit of context. So this is a quantitative pilot. About 560 female domestic workers were surveyed across 5 zones of Dhaka City, and qualitative research was also conducted to supplement these findings. And there are 4 main trends that I want to point out from these results. First, with the women in the sample, we see high awareness of mobile money, but low use. In specific terms, over 80% of women in the sample have used mobile money at some point in their lives, but less than 5% have deposited funds into a mobile money account. And interestingly, we see almost half of the women in the sample have designated another individual, such as a spouse, to actually issue transactions on their behalf. Second, in the sample, we see that women have poor knowledge that mobile money can actually be used to receive funds into their own accounts. So first, about 1/3 of the sample, less than 1/3 of the sample, has used mobile money accounts to receive money, but less than 10% have reported that they are aware that this is possible, with the exception of their current employer, Hello Task. So women aren't even really aware that this is a possibility, excluding their current receipt of wages. Third, we see pretty high rates of saving, both informally and formally, but mobile money accounts are not included as a savings mechanism. Less than 1% of women in the sample actually save into their mobile money account. And when researchers followed this up qualitatively, what they found was that most women expressed that they use their mobile money account as an intermediary step to accept cash. So in short, they're paid and they immediately cash out their wages. And lastly, we see qualitatively a low awareness regarding the link between economic independence and account ownership. So in other words, women in the sample associated empowerment levels simply to earning wages, but not with other dimensions of empowerment, such as increased control over financial decisions in the household. There are a few implications to these findings. First, with regard to women in the sample, we can see that having access to DFS is not sufficient to increase their knowledge, awareness, and use of these products. We can also infer that lack of knowledge about the potential uses of mobile money accounts is limiting women's usage of these products. And lastly, this study has a lot of potential to help inform the ways in which digital service providers are creating products that benefit poor women in Bangladesh, specifically with regard to wage digitization. Before I jump into what we're planning for 2023, I did want to mention that at this point in time, we have a lot of study results that are coming in, and we're releasing them regularly on our website. So please do stay tuned. We have a lot more exciting results that are in the pipeline. And of course, 2023 promises to be a very exciting year for us. We will be releasing our 4th RFP in the summer of 2023, and this call will focus exclusively on unexplored causal mechanisms in our portfolio. We seek to continue to establish best practices regarding leveling the playing field for PIs, especially from the Global South. And we continue to be committed to rigorously measuring women's economic empowerment. And lastly, we look forward to solidifying WeDefine as a thought leader in this space, including through dissemination events. And with that, I'd like to put a special spotlight on an upcoming event. Please do save the date. BIGD will be hosting an international conference in June of 2023, right here at the BRAC Center. Our conference is titled Making Digital Finance Work for Women, and we will be congregating academics from around the world, WeDefine and non-WeDefine academics, policymakers, and implementers as well. So please save the date. We look forward to seeing you there. With that, I'll wrap up. Please do engage with us. I will be here in person to answer any questions you may have. And otherwise, you can find us online at various fora. Thank you so much.
Thank you, Kim. It's really exciting to see the range of work that is ongoing, and very soon we'll be in a better position to understand all the dynamics that go behind the figures that we saw in Sania's presentation. We also have another project that's qualitatively looking into the onboarding experience of women to how when they start using digital finance. So it's all very exciting. I'm going to now turn to our panel. We're very privileged to have a great panel today. I'll start with Dr. Khandekar Shafat Ali. Shafat Bhai does not need much of an introduction. He is a renowned researcher, sociologist, has a long career working on different topics in a range of national and international organizations. I have a list in front of me. I'm not going to start reading them. I will go over time. But most notably, he's been working on mobile financing quite a lot lately. And he has published a book called Mobile Financial Service in Bangladesh, Success, Prospect, and Challenges. It was published in 2017, I believe. And more recently, he has worked on a report with BIDS on the impact of mobile financial service in Bangladesh, the case of bKash. So he has a very deep understanding of the sector and what's going on currently in Bangladesh. So I'd like to turn to him to share his reflections, 10 minutes maybe. I'd also like to add that he has recently joined as a visiting fellow at BIGD. So we're very excited about that. Over to you. Yeah.
Thank you, moderator and the panelists. So it is exciting from the two presentations. One, particularly the number, globally and locally where we are in digital space, particularly mobile financing. So the organizer particularly have some particular issues from the panelists. So I try to be focused on it. So I try to identify three areas. One, inclusivity. So we have a third generation inclusive financing product. So if I start first generation, that is MFI, microfinance. Second generation, particularly mobile financial service. Third generation, it is moderately banking service, that is agent banking. So we are preparing our unbanked people, mainstreaming to the bank. So that is our one kind of story we can build from our soil about inclusive financing. And it is very much located. I work with Professor Yunus, I work with now BIGT, I participate second time. So BRAC Development Institute, 6 years, and think tank organization like PPSC, he is the chair of BRAC now, Sanjil Rahman, and Atur Rahman, also policymaker. So in policy and Bangladesh doing a great thing, but there is some challenges also be there. So I am more focused on it. Second area, regulation. So you see mobile financial service in Bangladesh, we start in 2010, particularly first regulation coming 2011. It is guideline. Then 2018, it is a regulation, and 2020, that regulation also be revisited. So we have 3 generation also be regulatory regime also. So bank-led model, we start with bank-led model. So why? So in Bangladesh case, without financial organization, it is not possible financial involvement. So MNO, mobile operator, they are very much interested to engage in that area. And Kenya, M-Pesa, you know the model M-Pesa. So someone tried to bring the M-Pesa model, but Bangladesh is very much consistently pull his own effort. We are interested bank-led model. So third area I want to be touched, it is competition. That's very much important coming today. That issues is very much important. We give 28 license for MFS, but you see 3 or 4 name we can mention, they are in the marketplace. Bikash, Rocket, and Sure Cash, sometimes they're in market, but now it is replaced by Nagod and Upay. So why success story is less? Only one case, that is Bikash. I do Bikash case study for BIDS. So I identify 4 causes, particularly related with success. 1, investment, quality investment. 2nd, technology, robust technology. 3rd, distribution. And 4th, particularly management. So most of the bank, they engage in digital financing without understanding the whole complexity of that sector. That is one of my observations. For that reason, you see Rocket is a second player, they are bank, but they are not mainstreaming the whole services, part of the services like other services. And they are only focus their corporate client to give the service for MFS, that is for arranged ready-made garments. The owner of the ready-made garments, they are corporate relationships with Rocket, with a Dutch Bangla, and they get through Rocket. So that kind of detailed story also been needed. So now in regulatory regime, I want to bring very interesting findings. You see, MFS industry, we see the players, but we not see the powers of the millions, those who are the subscription, those who are the key players. You see, in MFS industry, growth is very fast, but competition is not there. Protection is coming there. Recently, it is one of the core reasons protection issues is very much there. Competition is not placed. So when your data said very clearly, particularly gender perspective, I can relate to that issues. You see in policy aspect, whole the social safety net, by design, women focus, mother get the priority. So they are the account holder, but that is managing by the male members, and they have not the hardware, particularly the mobile phone. So one of the political economic issues is there. MFS industry, particularly bring the technology, and they bring the network, regulation give the license, but core actors, particularly the agent, core actor, particularly the distributor, and the core actor, particularly those who are using that service. But right of the, but consumer rights is not protected. That is the whole area need to be focused in future. I just bring one agenda, and last almost the 1 decade, I am pushing that agenda. You see, cash transfer. I work on social safety net program with Hussein Zillur and me. Cash transfer now giving by the mobile financial service. But you see, the largest program of social protection service, education stipend program, primary education. So that is given by single MFS industry. So competition is not there. But government policy is there. Ministry of Finance, they have a order. Beneficiary have the choice, but it is not bringing reality. So question of governance is still there. So competition is one area I try to be focused. Future challenge of inclusive financing of Bangladesh for the growth. And with competition, cost issue is very much there. Service also be there. Interoperability issues is there. Then innovation also be with it. So we start a very good position, but that constant will be suffer to growth in future. But some good news is there. You see, with all limitations, we have some interesting growth and new areas there. One particularly nano loan introduced by Bikash. So when you are talking about the emergency money, that is already we have available. So big data is one of the key agenda. And that resource is now the future of the whole sector. But there also need a guideline, there a regulatory framework also be needed. That big data developed by the MFS operator, but what is the price for the future? Because there is a lot of money invested by the MFS industry. So that kind of very important agenda need to be developed, inclusive financing and growth in future. Finally, I try to bring two important things. That is digitization of MFI. And that is the irony of our development. You see, it is an opportunity for me, and I can say very strongly here, because I have that experience and participations with the two organizations, that is Grameen Bank, I work with it, and through university, little bit relationships with BRAC. So you see, through industry in Bangladesh, growing industry, growing by the women savings, one particularly Grameen Bank. So Grameen Communication, they are the owner of the Grameen phone. 36% owned by the microfinance organization like Grameen Bank. So there is some regulatory mismatch that also is not very helpful for us. That also be mentioned. Second part is very vibrant growth of Bikash. You see, it is a silent revolution happened, and 51% ownerships of Bragg Bank and Bragg also be there, and that is definitely related with microfinance issues. So it is irony, now it has happened, Bragg is digitizing, Bragg microfinance is digitizing, Shakti Foundation is digitizing, then Tangamara also big NGOs, they also be digitizing, Trust, Bureau Bangladesh, they also be digitizing. So interoperability makes a very big change in future in inclusive financing, because when interoperability happen, it's related with bank, it's related with microfinance, it's related with non-banking agencies, organizations, and also agent banking. So that momentum we are waiting, but still now. Competition is not sufficiently get the space. Protectionism is one of the area that is very challenging for us, that related with the governance. So end of the day, I tell the hero of the inclusive financing, particularly they are the common people. They are the unbanked people, but still now they are outside the financial service. I start my career in accounting, and I left out accounting because chartered accountant, it is a very legal profession, and unfortunately, they are not served the profession rightly. And that legacy is part of our inclusive financing, and unbanked people are not getting right, particularly lacking of governance. It is hidden, but needs to be talk on it, because if we can uncover, so unbanked people, they don't get the space to look forward. So I quote one word from Bikash CEO, because I am working in that space last 8 years. So when I cannot get any answer, so I have a right to talk with that actors. So he tell me, we are doing well, but we need one full support. In marketplace, competition need to be excess. Thank you. Thank you.
Thank you, Shakir Bhai. I'm sure there will be a lot of comments and questions. Hopefully we'll get to them after the three panelists finish speaking. I now turn to Dr. Saima Haq-Bidisha. Chapa is a professor of economics at the department at Dhaka University. She has done her PhD in labor economics and done an extensive range of research and has publications on gender and women empowerment, gender budgeting, among the range of topics that she's worked on. So I'm not going to delay her deliberation. Hopefully, Dishapa within 10 minutes.
Okay, yeah. Thank you. First of all, obviously, thanks to BIGD for inviting me and also for arranging this discussion, because the fact remains that on one hand, as Shakir Bhai already said, we were able to see the landscape of digital landscape of Bangladesh through the Findex data, and also we were able to see that what are the challenges, what are the barriers, and how we can deal with the challenges and the barriers through some research work, which we have learned from We Define project. Now, as Ms. Mehnaz was mentioning, in my portfolio a few years ago, I didn't have financial inclusion. Now the fact remains that recently we have been working on a project, and I would like to share some experiences because many of the things that we have seen today related to Findex data, that is very close to what we are also working on. So we have been working on a 3-year project funded by the Gates Foundation, and we are trying to look at different aspects of financial inclusion, and basically that's gender gap in financial inclusion. Now, one key aspect of the study is very closely related to what we have seen in the Findex data, so that's why I think it's very relevant to talk about it. We did one research, which is the quantitative research, which is 3,300 household and covering more than 7,000 individual, both men and female. And we have, I think, around 54% or 55% are male, and the remaining 55% are female, and the remaining are male. And the study has also a qualitative part, and because the fact remains that when we are trying to look into some very nuanced thing, looking at the gender gap, often the quantitative information are not enough. So we also wanted to see that, and we have conducted FGDs, like more than 60 FGDs, ITI, 60 IDI, and also KIA of different stakeholders. And what we have seen, that there are several interesting findings that we have seen, and I would just like to talk a little bit about that, being within the time constraint. So one thing I was just thinking, when we are looking at the Findex data, is more than 50% adults have account. So that is something I was thinking that probably in the context of Bangladesh, whether it is a bit on the higher range, because what we have seen that it is less than half when we are looking at the bank. But when we are talking about mobile financial services, that is quite high. So probably that's the way it is balanced. Why people are using banks? So one of the reason, the most important reason is, we know that 75% people more or less, but they're using bank for savings. They are using, some people are using for businesses. But the fact remains, just like what we have seen in the Findex data, that for the businesses, the percentage is not that high. And that is some point I think we have to feed, because savings is obviously important, but at the same time, using the bank account for making transactions for business purposes, and that is extremely important when we are talking about the females. So why the females are using bank account? So when we see that the usage of bank account, that is quite low when we are even talking about the male. So for the female, it becomes even lower. So still, there are a lot of things and a lot of barriers and a lot of way that we need to go to have the proper financial inclusion. Another thing is why some people are excluded, because we have also talked to people who are excluded. So who does not in the household, there is no one who have any bank account or MFS account, or they're not also involved in any MFI. The most important factor that we found is we don't have the money. We don't have the money, so why we will have an account? Why we will have the MFS? Why we will have the MFI? So that was the answer. So that is something, it's important to see that still, especially when we are talking about in the rural context, poverty is one of the issues that is creating, obviously, as we have seen in the Findex data, because Findex, they can see the differences over time. For us, it's not possible because it's the baseline. So the reason is, as long as we have the poverty is there, then there is a gender gap. There is a gap in financially included people and the excluded people. Another thing, or several key things that we have found here as well, like why some people are excluded. When we were asking about the woman, there are some restriction from the family. There are some percentage say the restriction by the husband. Restriction by the husband does not have any problem, but the problem is with the in-laws, and even they don't have any problem within the family. There are problem within the village. So that is one issue. But interesting issue, what we have seen, there are some percentages, it's not very small percentage even. They are telling that they don't see that is their work. So they don't think it is important to have account, because probably my husband have an account. Why I will need an account? So this is very important. This is the gender stereotype. So this gender stereotype, as long as there will be gender stereotype, as long as we cannot change the patriarchal mindset, it will be difficult to reduce or to eliminate the gender gap. So this is a place that we need to do a lot of work. That is what we have seen in our analysis. There's also another thing we have seen, like the digital literacy. And digital literacy thing is also very important when we are looking at the females, because often, you know, if you have a bKash account, when you touch it and the red bow is there, so that touch, often there are some psychological barriers to the people, because they think, or in the rural areas, some women think that by touching that, whether we are doing it in a correct manner. And that is also related to it to some extent, not only digital literacy, but also related to mindset of the moment, that you will not be able to do that, and I am not able to do that. So that is also another thing that we have seen, the digital literacy and unable or not very sure about doing, or feeling very confident about doing financial transaction. That was also some of the aspects that we have seen, especially when we were talking with the people in the FGDs. There was another thing in the FGDs. I have seen that even in Dhaka, in one of the slums, we have gone, and they were there, and in many other places, they were talking about issues related to scam and fraudulent attempt. And that is also another thing. And a lot of them have said that they have been victim of different scams. So that is also another area in which I think a lot of work has to be done. And regulation, as Shakhat has mentioned, is very important. From quantitative analysis, also from the qualitative analysis, we have seen that a lack of documentation, or not being able to get documentation, or not being felt very welcomed in the formal institution. That was another obstacle. And that obstacle was not only found for the females, but also found for some males as well. So for both male and female, lack of documentation and not being treated equally, or especially for the females, that is one of the reasons for their not being able, or not being. One is not being able and not being interested to go to a bank and open an account. Another thing is I think the most important thing, we have also, another important thing that we have seen is the purposes for which they have opened an account. And significant percentage of people, they have opened account not only for savings, but also for remittance, G2P payment. But the fact remains, when you open an account for G2P payment, probably you are financially included, but it depends how you will sustain that, or whether it is sustainable or not. Because often many people have said that they have this G2P transfer, but now for the last few months, I'm not receiving any because I have shifted my house and I have that girl has got married. So the money is now not coming to her account. Previously, it was coming to the account. So she does not use the service. So that is also another thing we have to be aware that whether the account, whether it's a mobile financial account or a bank account, how sustainable it is and whether it's sustainable or not, because it should not be a one-shot goal and then just closing the account or not using the account at all. So that is also another thing. And another interesting thing that we have seen is like for some of the things that like remittance. So remittance is being used by the females. So one of the things in many cases being used by the females because it's a male household head. That person is abroad sending money and the female is using it. So I think another interesting thing would be because that if the Bikash or the Rocket or whoever be the service provider, if they can have some interesting scheme, new product for the females, because they are receiving the money in most of the cases, so that the remittance money, they have the money in their hand. They have at least some degree of control, some degree, if not 100%. So if that can be utilized in a more productive manner, in that way, that mobile financial service provider, they can work as well. So there are some of the areas where a lot of things can be done. So I think the final point is like the 2 points. One is what are the barriers, to identify the barriers for both male and female, and some barriers which is very extensive and which is very exclusive for the females only. So to identify the barriers, and for some of that to treat those, and for some of the barriers, we can have more, I would say, relatively easy treatment. So relatively, because digital literacy, designing new product, those may not be a very hard thing, but more challenging thing is like to change the gender stereotype. So there are gender stereotypes that we have seen that even for the service provider, they were telling that there are gender stereotypes in some of the banks in the very remote areas, rural areas. They don't treat it. So that's why I think that is very interesting. I was finding it very interesting to see that if the female is providing service to the female, one of the We Define project, that is some of the things that we should promote more. That may help to change the gender stereotype thing. So one is to look for something to provide a better literacy, better internet connection, cheap mobile set. That might look silly, but that is also feasible. That is one of the problem, because if you don't have a smartphone, often we cannot transact a lot of the services. But I think the most, and some are to change the gender stereotype changing from the service provider, maybe a little bit easier, but from those who are demanding. So if they have a patriarchal society, they live in a patriarchal society and patriarchal mindset, then it's difficult to change. But still there can be some training program, there are some initiatives that can, maybe not in the very short run, but in the middle run, that can work. But I think the last point is, most important thing is when we are talking about financial inclusion, and when we are talking about, for example, financial inclusion and to reduce the gap between male and female, gap between rich and poor, we must keep one thing in mind. Financial inclusion does not always mean financial empowerment. To have the to link the financial empowerment with financial inclusion, we need to see why the person is using the account or the mobile financial service or the mobile financial institution. So that is most important, the purpose of using the digital platform or the banking platform. So it is important to encourage or facilitate the purpose, so that it's not for transaction, not for just making a payment, but to pave their way towards their financial empowerment, financial employment as well. So if they can link the financial inclusion to being financially employed, to get empowered, financially empowered, that can help them to be financially empowered and empowered finally, because even financial empowerment does not tell that a person is empowered, but at least financial empowerment helps to pave the way towards empowerment. So I think that's the message that we have got till far from our research and from analysis. And we are quite excited to see that what type of result we will see from the We Define project. So looking forward to that. Thank you.
We're doing quite well on time. So we have our third panelist now. We're very lucky to have Bitut Kumar Bosu with us. He has extensive experience working in the private sector, which has been the driving sector in this industry. Bitut Kumar Bosu has worked in Grameenphone, Robi, Telenor, and in leading positions for many, many years. And I'm very excited that he's here to share some insights with us and reflect on what he's heard so far. Thank you.
So thank you for inviting me here. But when I was included in the list of panelists, then I was thinking, why am I here? But after listening to the discussion so far and looking at the data presented, I feel that my being here, the value have been achieved more than whatever I can think of. So thank you for different topics presented here, and also for being with us together. I have worked in Grameenphone and Robi. Yes, you're right. I have been part of setting up Vikas 2 from Robi. I was trying to assist on that. But now I work in an NGO, MFI, which is Uddipan. And during the COVID, I have joined in December 2019. So I just completed 3 years. And I think this is a fascinating journey to work with people being there, even in the hardship of COVID. We have expanded significantly during this period. We have expanded in terms of reach. We are, for example, we have moved from 300 branches to 1,000 branches. We have moved from $70–80 million of outstanding to the customer to the around 200 million. But more importantly, in terms of reaching out to the families, we are almost reaching out to 1 million families of our members, but there are a significant number of would-be members where we go with different other services like medical services and others. So in this transformation, what I tried to use from my previous experiences, the digitalization is one of the delivery mechanism. So I thought of doing that a little later after understanding the industry and the sector, because this is a sector developed over 50 years. And I'm coming from a completely different spectrum of the services. But COVID really didn't allow me to have that time. So we had to keep going. So we had to move into the digitizations. I first started with the team that, okay, you go back to your base, don't go out, follow the protocol approved by the government. But why don't we reach out to the people, all our members, if we can just call them? And if we distribute the members among all employees, then his call is not so significant, just few hundred each. First day, we have recognized that our database is not correct. The key data is the mobile number. And the mobile number is not correct, kept in the system for 30 years. So I'm sure same would be the experiences of most of the NGOs we have now. But they would be also finding a way to fix it. We got a way to fix it. And now we have very good accuracy level, not 100%, but at least 65% for sure is correct. And there are every day is a kind of increase of the percentage of correct mobile number. So if the mobile number is not correct, none of this initiative will be correct. Then we have also gained one more insight, that is people in our surroundings, they thought the one sure shot intervention of the COVID should be to give relief. Interestingly, that was nullified by that direct research of the customers, from the customers. They didn't want relief because I think as a country, as a nation, as individual, we have moved beyond that relief mindset. Rather, the most of the question was, if I fail to pay on time, as we are not allowed to move out, would I be kind of marked negatively so that I don't get the fund again? So she was more concerned about the status of as a borrower. Then we said, no, that will not be. And on top, if you need, you can use the fund you have to survive. We will try to refinance whenever the situations get better. And we didn't have to refinance much. They kind of themselves protected. Rather, they helped respect by providing the money any way possible. And that's where the presentation from Sania connects to the fact what we have faced here is bKash or any other MFS. Yeah. Can I send the money through the MFS? So that's how the digital activities grown a lot in Bangladesh. We have tried to get that from almost from 2009, but the adoption rate was not very high. But when it was forced by the situation, the adoption rate went very high. But when the COVID situation improved, then the adoption rate also fallen down, not to the previous level, but somewhat. Here comes the BIGD. And again, thank you for inviting me. I was reading through your material. I love the first priority you have projected there on the first page. That is 5 projects, DFS coaching, training, or technical assistance. When we move from commercial perspective or from result perspective too much in our head, we move from imposition. We don't really look at how people are adopting it. We go based on the set of information or learning we have. We don't really validate how they're thinking of it. I'll connect that with one of our experiences. So in terms of adoption, if you look at the registered base, of course, the mobile penetration maxed, that means crossed the 100% of the population because we have the multi-SIMmer. Almost 15, 20 or 25% people have different SIM card in the same name. So that's how the total number is more than 100, but still there are less real user. The same thing happened on the or mobile money system. If you look at the official data, it's 100 million. So it's way than official population data we have. But that is registration of it. But if we look at daily usage, this is something daily uses. We do use our money every day. So then it should have been used every day, even 1 taka, 1 cent to a few dollar transaction. We don't. Why? Because possibly we have overbranded the P2P transfer. If you remember the mobile, the GSM, the Grameen phone, till when that came, we used to market one brand, Nokia. Nokia is a heavy phone there. That's it. It's a kind of, that's 1 to 5 years, but people still carry the love for Nokia as a brand. So it's a kind of early adoption. So with the concept of anything new and whatever the feature comes in first, maybe that somehow remain in our heart. So maybe that's what the research, we should have a research kind of BIGD and others are doing, and we should get a kind of reorientation on it. So DFS still now, I think, fully focused on P2P. That is one of the answer to your last page or last page to last page. That is the real adoption of mobile finance or mobile money has not happened in terms of transaction. So if I do not use the money through the DFS, so who will pull me to have the money through the DFS? So that pulling factor is not here. I want to kind of express my gratitude to our former governor, Dr. Atur Rahman sir. So who had a very good role in giving the start of this DFS. We need, for a new child, for a family, for a new family, we need guardians. So for an industry, we need guardian too, to grow as an industry and then to connect with other industry. So this connecting with other industry as a telecom, I feel, I worked in telecom for 20 years. I feel we failed significantly because telecom grown so fast, so much of a growth on the bottom line. So the arrogance, like arrogance in individual, arrogance in the industry comes in, and that plays a blocking role in the eye. What potential we are not looking at. The charging for call or charging for connectivity, still the main revenue. Why? Why the heck we can't see beyond that? That getting in the boat and going or on the other side is free, but whatever you do on the boat, that can be chargeable. You can share from the value you create. Then you don't have to hang around with this $3 to $5 business. You can do much more than that. The same way, when DFS grown, DFS has grown significantly, very impressive, but still remaining within that secured money, the money transfer related business. But what about the rest? What about the retail activities? What is the retail transaction per people, per individual we do in Bangladesh per day? Is it 2? Then we have 34. So 234 million transactions. What percentage of that in cash and what percentage of that in our mobile finance? So I think that's where we have a way to go. If I connect that with our industry, my recent love, that MFI, this is a significant platform to connect together because 65% of the population is already connected. If you look at the volume of the loan given to the individual, it's humongous. It's only BRAC, Grameen Bank, Asha. So Grameen Bank is an individual, they have the act, but then Asha and others, if you see what is the outstanding figure, 20,000 crore, 22,000 crore taka. And what is the savings from the customer? 50% of that is the savings, even without nano savings. Now, we are adopting nano savings. We are adopting nano loans. What is the best case for it? Best case for it on the bottom of the pyramid. Best case of it is the people on the rural space where we are working with. Why? Because they are already used to with a smaller credit, smaller deposit. Not the bank account holders are used to with that. The first experiment started with IDFC. Second experiment started with Citibank. Very good. We have tested with the properly regulated industry. But how and when we can take it to the bottom? Our readiness is not only DFS fault. It's also our readiness to adopt that. Are we ready? Are we digitalized? We have digitalized in terms of MFI. We have digitalized in terms of connecting Bikash and other DFS. And now we have added a new element, interactive voice response. IVR is a artificial intelligence based. For every transaction, we are providing confirmation by voice because they understand their language, but so not everybody can read. So even in local dialect, we are providing that. When we started giving that, the first resistance comes from the team. For DFS, first resistance comes from the team. Why? Because they're used to it certain kind. Even it is easier, even it is faster, still they will try to resist. That is, onus on you is to prove that it works. So in last 8-9 months effort, we have been able to only reach 7% of our transactions are being covered by Bikash, but it's growing every month, 1%. I'm sure when this percentage goes up to 25, then the adoption rate per month would be faster because then they know it is working. And we will also know how people are using that. With this new solution, AI-based solution, Hisha, which is a Japan and Bangladesh joint venture, they have made it. When we have proposed to our team and to the members in our centers, we see the members are adapting faster. So technological intervention, the adverse behavior is more in the team on the ground than the ultimate people. Maybe they have got used to, but also they have got used to with some power. There is a small power. The power is when they hand over the money or they receive the money from the end user, temporarily, that credit officer is a powerful person financially for a day or 2 or 3. And if he can somehow extend the days, how many days he can keep that money in his pocket, that's the kind of business case for him. But if we reduce that, we reduce the chances to lose that money. If we bring the microfinance automation together with DFS, together with the interactive voice response based confirmation that we have received your payment, is everything can be done within a day. Real time. And then if the customer says that I have no complaint, I'm happy, I want that, that's how it becomes win-win. So I think you have opened a lot of my eyes. And I think as an industry, as a multiple industries together, we need to open our mind and eyes and find a way what can be most customer-friendly proposition whenever there is no harm in doing or starting something. But when we have taken that to the people, we should be connecting with the people more and more and learn from the researchers that what are actually they saying. Because when we push things, we are biased. We need to make ourselves unbiased and then connect our best practices and go together. Thank you.
Thank you so much. We're a little over time, but I think this is an interesting enough discussion. We're right at the moment where, I'm sure there are lots of questions. We've had 3 very, very thought-intriguing interventions from our panelists. So I'd like to open the floor now. If there's anyone in the room to ask questions to the main speakers and also the panelists, you're welcome to do that now. And then we'll go maybe look at some online questions if there are any. Yes, please, and please introduce yourself briefly and then ask a question.
Hi, my name is Sharyar. I'm representing Keymakers Consulting, which is a private research firm. Thank you. That was an intriguing discussion. I was very happy to see the point on the cultural barriers for holding an account and interacting with MFS, because some of our experience in the sector is also similar. We work for some of the private sector companies that do MFS. Two things that we have noticed, and I'd just like to reconfirm whether those have also surfaced in these studies that you have mentioned. One was the barrier of the interface. So some of the interfaces for our DFS and MFS systems are quite clumsy, quite English heavy, and not very user friendly. And that becomes a real barrier when we go to the rural consumers, women, people with primary level or secondary level education, etc. Whether you have also seen that is something that I'm curious about. The other thing is about more about semantics. So you'd notice that most of the terminology are, very difficult for our people to understand. If you think about how we talk about BFS or MFS, we talk about cash in, cash out, etc. And some of the terminology are even more difficult. So people do not understand those, and therefore they're quite hesitant to, regularly interact with those. So I just wanted to know whether these are also coming up as issues and whether some of these are already being acted upon. Thank you.
A question for any specific speaker or?
I think more, it's open, but more towards, Ms. Sanya Ansa and Dr. Hawk.
Should we take a couple more videos? Yeah, let's take a few questions first. Yes.
Thank you. Hi, I'm Rakib Avi. I'm with BRAC. So all of that discussion is super useful for me as well. One specific question for Ms. Sania Ansar. In terms of increasing uptake of savings and loan products in other similar markets, are there any examples which could work for Bangladesh? And that's one specific question, because we're seeing that there is stagnation. It's reaching 76%, but how do we reach the last sort of 20-25%? And another question towards the We Define team, is there any plan in terms of having financial product design as part of the priority area as well for research? Like what sort of products could work in terms of designing more equitable savings products for women or other loan products? Thank you.
Thank you. That question. Maybe one more person from the room. We have some from online, but let's finish those who are in the room first. Anyone else? No? Okay, so let me see how many questions we have.
Hello, I'm Farhana Kabir, Research Associate at BIGD. So my question is to Ms. Sania. You mentioned that in your data, it has come up that there's virtually no use of merchant accounts in Bangladesh. So could you elaborate on that? Because is your data more rural based or more urban based? Because in Dhaka, we see merchant accounts being used every day in almost all sectors. So I was curious about that. Thank you.
There are no other questions from the room. We have one question from online from Mohammad Mubassir Rahman. And I believe this question would go to Shafaq Bhai and also maybe Bitu Bhai on how can market competition in the MFS space help in the financial inclusion of the unbanked? And I would like to add also, I'm also curious about how would you propose to increase competition in this sector? And he also adds, assuming that reaching out to the unbanked population is investment heavy because of their low digital financial literacy and their reluctance to adopt new technology. So in this context, how would you address the issue of competition? If that's the question. So where should we start? Let's start with you. Thank you. I think I would answer this question as the type of challenges that we have seen while talking to the rural people especially, and also to the people who are in the slum, which is related to mostly digital literacy. Because we never went and asked them about MFS or MFI. We just asked them that whether you go to bank, then whether you have bank account, and then no, we don't have any. Many people ask that, okay, we don't have any money, so we don't go to the bank. Then if you dig up a little bit, then whether you use any of the you use your phone to make any payment or to pay the bill, then sometimes they're also not very clear. So then often we have to show the Bikash symbol or something like that, and then they understand what we are talking about. But interestingly, it depends. Like when we are looking at the younger generation, many of them, at least they know about this Bikash, Rocket, Nogo, this type of payment. So that is something like there is also issues related to the age, which is quite obvious. So over time, and also income and education level. And of course, there are gender differences as well. But over time, with some education, and especially to the younger generation, these problem related to the interface, problem related to technology, this is a little bit reducing. And we are expecting that if we can provide more training, make the products more easy, more user-friendly, that will help to reduce the gap more. So that is what we think.
Yeah. I think there are 3 questions. No, thank you. Great questions. And I think a lot of the panelists here obviously have the field level or the country level experience to expound more on that, just like Dr. Hug did just now. But maybe I can bring in an example from Sub-Saharan Africa. So, I mean, I know in the presentation here, I talked more about the challenges for the unbanked, or when we talk about like the lack of confidence among the unbanked to use services or financial services, I think that speaks to some of the challenges that they think that they will experience with the interface as well, or just the overall like features of how a smartphone would work or how a payment system over a mobile would work. So we introduced a version of that question in Sub-Saharan Africa, which you may know is one of the pioneers of mobile financial services, and we've seen it grow tremendously over the last few years. And we find that, and in that group, we asked those who actually have a mobile money account and are using mobile money services, whether they need the help of an agent or a friend to use their phone. And shockingly, about a third of them actually say yes, they need help, which means that the challenges, even in a region where it is so prevalent and common and a lot of payments are already being made, those challenges do exist and will continue to exist. So as our last panelist was also talking about this, there needs to be a constant rechecking and a reevaluation of what the consumer is using and what the needs are at the time to understand. And again, as Dr. Haq also answered, I think there are a lot of gaps in this data also. So always think going forward with the idea that even in the Sub-Saharan African data, we find that women were more likely to report these challenges. It's poor who were more likely to report these challenges. So the traditional underserved groups are also more disadvantaged when they're using these. So I think with that, maybe the question on formal saving products, it's a challenge. And I think one of the points that I also made in the slide is there is an appetite for saving and people are saving, but they're not saving in ways that are formalized, right? So there are 2 gaps. One, there's a gap that's coming from the supply side. Maybe the right kind of saving products are not being offered, right? So there are a lot of countries where formal savings has really picked up. And I think East Asian Pacific countries are some of the biggest examples, such as Malaysia, China. And when the formal savings are high, some of the correlates or some of the things that you see that are being picked up or also observed when formal savings are high in the country is that people are more resilient. They understand that they need to put away money. They need to like have some sort of fund set aside for old age. And I think so those kind of cultural aspects also play a role. But I think at the same time, the right kind of products, so low denomination saving products were being offered, or the right kind of informal saving products were offered. So, for example, a lot of the people, especially in South Asia and Sub-Saharan Africa, use informal saving groups. So a group of women will save within their community, which means they have the ability to set aside the funds, but no one is providing them with the right kind of, or the efficient and the safe kind of way to channel those funds. And I think maybe Kim can also answer about some of this, because I think there are a lot of initiatives that have centered around capitalizing or using the informal saving groups as a way or as a last mile to formalize them in a way that helps the savers. And then for merchant accounts, so the data is nationally representative, and it is a combination of all the different regions of the country. And I think based on this data, there may be, if you dig deeper into the data and look at urban, rural, and then look at urban rich versus rural, I think you'll see big gaps in those where some of these like issues will start to emerge in terms of how common merchant payments may be. We've seen for other countries, for example, in Latin America and the Caribbean, we've seen that the data there actually connects to a supply side uptake or increase in the volume of merchant payment transactions. So we know in some countries where, and again, I have to mention, this is a perception-based data, right? So this is people responding. So while we may see at a store or a merchant that these payments exist, I think what really matters in this survey, at least for us, is that people also feel or perceive that they were able to make a digital merchant payment. So anyway, connecting the 2 points, I think it really depends on the national average or the national statistic of where a digital merchant payment was being made or used. But it could be high or low depending on how people perceived it.
Thank you. Does that? Yes, please.
I think we can take one case for that. For example, we have 51% savings collected from the customer of whatever the loan size we provide to the customer. So one group of people are providing savings with us, keeping savings with us, and then another group of people are taking the loan. And that is based on almost 93% manual process still. So if we can adopt the MFS and other solutions together in a way that people feel comfortable to use and secured to use, this can only enhance. For example, instead of 200 taka or 1,000 taka savings ticket, then we can convert into even a few cent savings ticket. But few cents from one person can be a huge money if that is from 20 million people or 30 million people. The whole dynamics can be changed. So I think there are plenty to innovate if we listen to the customer properly. But we don't need to be really worried, because we have done the hardest part of it, meaning reaching to every house, reaching to people. So even by P2P transfer, or just having one transaction in a month, at least we have got some light there. Now we have to make sure that everybody uses it, and everybody uses it for day-to-day activities details. Thank you.
Thank you. Thank you. Bye. Shahbaz, do you want to take the question on competition?
Thank you. So I try to be put very realistic way. Just to think about before Grameen phone, line phone is the option. When in marketplace, Grameen is coming. Before that, you see other phone companies is there, but change maker is Grameen because of regulation and the whole attitude, investment. So it is matter. When you create the ecosystem more competitive, then it works. Another, television, you see. So BTV, and just you see in private sector, it makes a different ballgame. I will be very much particularly MFI. It is a question of investment to digitizing the whole system. Who invests that? That is the question. I set an example from social safety net. So when government interested to make it competitive, because it is question of choice, X, Y, Z, I can select any MFS industry, MFS operator. But if you change, so already there is an investment. So you see, to open a single accounts, KYC and other thing, $2 is expense. So that $2 who invests? So ecosystem, create the whole ecosystem is very much crucial. It is, so when we go to the agent is the investor, don't forget it. It is a e-money, he invests that money. So invest of return is very much crucial of that industry. We never be forget it. So reduce the cost. It is very much populistic, political jargon. So return of investment, you must be calculated return of investment. So you see distributed the same thing. So Uddipan case, I saw other case also. So it is beginning from COVID particularly, but still now industry is not ready. I give a very specific questions for you and information for you. Grameen Bank. So whole Grameen Bank data maintaining by the Grameen communication. So Grameen Bank governs by the government entity now, and Grameen Bank subsidiary, it is controlled by others. So political question is there. And for that reason, Grameen Bank is not digitizing. So that kind of thing in our society sometimes makes obstacle. So last, Grameen Phone start with a very small initiative. Only phone, we can now don't remember. I facilitate that study and publish that study. So don't forget it. So if market works, competition is there, so people change their own way. So opportunity created by MFS industry already. We have almost 12 years experience, and all the giant of the investor, they're coming here. That is our opportunity. We need to be put our effort, particularly nothing's not to be interfere more. Pro people regulation is very much important. বিদ্যুৎ ভাই আতির ভাইয়ের কথা বললেন, আতির ভাইকে একটা টেক্সট করেছিলেন প্রধানমন্ত্রী, যে ওই গভর্নরের উনি প্রায় বলেন, এখানেও বলেছেন, সেই সময় আমি ছিলাম, কামালও ছিল, যে আতির ভাইকে প্রাইম মিনিস্টারকে টেক্সট করেছিল এই কথা বলে যে গরিব মানুষের জন্য কিছু করতে বলেন। আমিও কিন্তু এই জার্নিতে আতির ভাইয়ের সাথে ছিলাম বলে এই কথাগুলো জানি। এখানে কিন্তু ওই জিনিসটা খুব ইম্পর্টেন্ট এন্ড অফ দ্য ডে, এবং বাংলাদেশে সেই জিনিসটি এখনো আছে। কিন্তু আমি যেটা দেখছি, বিদ্যুৎ ভাই অনেক বললেন যে এই ডিজিটাইজেশনের ক্ষতিগ্রস্ত হয়ে যাবে ছোট ছোট এনজিও গুলো, কিন্তু তারা ওটা পারবে না। লাস্ট মাইলেজে কিন্তু পৌঁছানোটার জন্য এখনো কিন্তু মাইক্রো ফাইন্যান্সের প্রয়োজন আছে। এই সবগুলো বিবেচনা করে ইনক্লুসিভ ফাইন্যান্সিং বিষয়টাকে দেখতে হবে এবং এই ধরনের আলোচনাগুলো খুব ইম্পর্টেন্ট আমি সেই দিক থেকে মনে করি and particularly women segment your initiative is very much good. I just request one issue that is social safety net. We need to be at social safety net because public money investment need to be monitored. Social monitoring is very much important because digitizing is not enough. We look back again and again to repair the pilferage system. কারণ ডিজিটাইজেশনও কিন্তু পিলফারেজের সুযোগগুলো হবে তো সেখানে আমাদের যেহেতু নিয়ত খারাপ সেখানে কিন্তু আমাদের সোশ্যাল মনিটরিং এর জায়গা থেকে জিনিসটা রাখতে হবে ধন্যবাদ
Kim, do you want to ask the we define procedure?
Thank you. Thank you so much for that question. I think it's really pertinent and gets at the ethos of why we define a structure the way that it is. I think the short answer is going to sound pessimistic, but no, we are not set up to support product research, product design, market research, etc. However, what we are aiming to do in all of our projects is finance rigorous academic research with policy relevance. And I think we do this in three different ways. By procuring research that examines specific causal mechanisms, we're really looking at the specific interplay between DFS and we, and why do these two inform one another, and in what ways. Two, we are really supportive of mixed methods research, and that's largely because there's a lot of critique around randomized control trials, especially as being a black box. They measure these impacts. We have these fantastic impact estimates, but we don't know why, and we can't explain how these translate to product design. So qualitative research in tandem with rigorous quant research is one way in which we can start to answer some of those questions of why do we see what we see. And lastly, in all of our projects, we seek to procure research where our researchers have very strong relationships with relevant implementers. And we do that in a variety of ways when we're looking at different proposals. But as I think, our Bangladesh portfolio really speaks for itself, the researchers are so deeply ingrained with the implementers that the product designs that they're iterating on really are meant to be executed at scale, assuming they do work. So the direct answer is no, because it's simply not our mandate. However, we do aim to have practical relevance with all of our studies.
Thank you. Okay, we have another comment on competition. Just a minute.
Yeah, if I have noted it right, there was one more element in the competition. The competition per se is that Bikash, Rocket, Nogod, like that. If there are new players coming in, what and how to work, and especially in the rural space. I have indicated at the beginning that there have been a lot of licenses. I can't remember the exact number, 27, sir? Yeah, 27 licenses were issued, but that's most to the existing bank. So bank-led model within the bank. So that has some benefit because then the existing goodwill can be utilized of the bank, reliability, but also banking as an industry focuses on the bigger transactions, bigger clients. And this is a very small transactions and volume game, lot of customers. So within a formal bank, how one new business unit or division enriches, that may have some challenges. Maybe that because of that reason, that model hasn't been so successful yet. But if we look at independent companies like Bikash and also Nogod even, they are new, but still they are making
it is a subsidiary, no
subsidiary, right? So they have their management. That's another way to manage it. So if you look at going to the field, maybe a new or existing operation, they can learn from whatever good things have been happening so far. So that's the issue, maybe. Can I have that one? Is that one thing? Yeah. So if we look at the opportunities, initially the DFS, they've gone through the corporate route. So if they can have one customer, one decision maker, and that can impose on a significant number of users. For example, garments. Of course, but then there is not real individual empowerment that I like the service, so I'm using it, so this changes my life. But then more of a compliance. My bosses said that I have to use it, so I'm using it. And so that has certain value, but not the optimum value. So if the perceived cost, sometimes cost is not as high as people perceive. So there is, we call that as a kind of charges, but that's a one-time charges, not cash in and cash out. That's a once charges, and only for cash out. But the perception sometimes works like that. Oh, they charge both way. So, and then another thing maybe can be looked at, if we look at the volume, the impact of the volume, and if the cooperating organizations together think that by taking this initiative, we are saving quite a lot of money, or we are increasing the bottom line, in that case, we can stop transferring customer charges, the small charges to the customers. So then customer can have a free service proposition. What Madam was talking about at the beginning, the better utilization of the money. Because with this individual savings, with individual transactions and all this, there is a float money. A lot of the float money comes into the control. Now the question is, by the regulation, are the DFS allowed to use that money alternatively, or they just have to keep it intact as it is?
There is a regulation. Trust.
So if they can utilize that money, and there would be much more benefit than this 1 cent, 2 cent charges. And that benefit can be kept by the organizations, and sometimes some of it can be transferred to the end users. So by that, a new operator can be more successful, or even existing operator can be more successful. So for successful operator,
correct করা যায় না হলে মিসইনফর্ম হচ্ছে এখানে কিন্তু প্রতিদিনের উপরে ইন্টারেস্ট দিয়ে দিচ্ছে এই সিস্টেম আপনি যেটা বলছেন বেনিফিট হচ্ছে কিন্তু আপনি যদি টাকা রেখে দিচ্ছেন আপনার ওয়ালেটে.
Yes, some of them have introduced that, but that's not the market competitive. What Madam was saying, because individual user is not capable of using the big money, but the banks are. So they know how to make more money out of it. So if they can make more money out of it, and they can provide little more than what they get as interest. So there's a different value proposition altogether. So that's how things can be even more rewarding for everyone else. Thank you.
Thank you, Shakot. We are mindful of the traffic today. People like to go.
Just একটা কথা বলছি এটা মাইক্রো মেজো ম্যাক্রো ইকোনমিতে বিরাট ইম্প্যাক্ট এবং টু একটা মানে দুবার ব্যবহার হচ্ছে. So it is a tremendous effect.
No, definitely. Hopefully, this is a continuing discussion, and BIGT is very excited to be part of this conversation. Thank you, Sania, for coming today, and to all the panelists and Kim for organizing. This is a critical juncture, of course. Access to financial resources is a driver, has always been a driver of inequalities within communities and within households. And we have a great opportunity at the moment to change things, and also at risk of reinforcing gender gaps, for instance, that will really be a setback for development in general. So this is a very exciting time, and we are very excited to be part of this conversation, and we want to take this forward. And as Kim had mentioned, we do have an international conference coming up on this topic in June. So please stay tuned, and thank you everyone for coming today. I know that it's a very difficult day. The traffic is very bad today, and sorry for going over time, but I think it was well worth it, the discussion. So thank you very much. There's tea and snacks outside, please.
Send the slides.
And all the slides to.
Are we?
Yeah, you share a version with you that.